Here we are again at the Trader 24 studios. In a difficult equation of high inflation in the major economic systems and manageable energy costs with gas and oil as key suspects, a looming lockdown in major Chinese cities and ports, and a war that just won't end, investors are still trying to weigh the risks involved, especially in the equity markets. And with the assassination of the former Japanese Prime Minister Shinzo Abe not stirring the waters as the event was slightly valued by the boards, interest continues to be dominated by the shifting monetary policy of mainly the Fed and secondarily the EU, because the sensitivity of macroeconomics to the new decisions will also determine the avoidance or not of the recessionary plague that threatens to tear economies apart. You're watching the Trader 24 Global Market Overview. Let's take a closer look at the situation. The announcement of a 372,000 increase in NFPs in June, while it was expected to increase by only 250,000, gave a breather to the US markets, which continued to rise on Friday, ending the week up on the main stock market indices. However, one should not neglect the fact that Wall Street has been on a downward crescendo for weeks and that Friday's levels relate to serious resistances that could halt the upward reaction attempted in the context of a partial mitigation of investment risks. And in fact, the reluctance is evident as volumes continue to be only marginally close to the average, while the picture from the forex and commodity markets is more indicative of negative anticipation or even risk aversion, which seems to unmeasurable at the moment. S&P 500, Nasdaq, and Dow Jones did not surprise, closing around unchanged, with the most important observation being the constant changes in the sign, while, for example, in the large cap reached 12, confirming investor uncertainty. The picture was similar in small cap, with the Russell 2000 also unchanged, with very low trading activity, while the VIX risk index lost 5.52% to close at 24.62 points. The key players in large cap were Endo at plus 13.07%, Centene at 3.23%, and McKesson at 3.10%, and from the technology companies, NetEase at plus 2.67% and Tesla at 2.54%. In the industrial Dow Jones, all 30 stocks closed minus 2% to plus 1%, while sector-wise, only 3 S&P sectors closed positive: health, technology, and consumer goods. Well, in the pre-market now, most listings are moving down, with the Chicago futures agreeing to a negative opening, at least for now, and Asia having mixed signs as the Hang Seng dipped minus 3%, while the Nikkei gained just over 1 percentage point. We recall that the movement is catalyzed by the upcoming June CPI results. The market is talking about 8.7% in total and 6% in structural, with the energy now accounting for 34.6% of the total, a level not seen since 1981, with fuel prices rising 106.7%, setting a historical record. European markets have not maintained their strength and are recording losses on the major stock exchanges. The DAX and CAC 40 at minus 1.4%, while the 50 and 600 Euro stocks at minus 1.45 and minus 1.3% respectively. The biggest losses were recorded by the shares of L'Oreal at minus 3.91%, followed by Iberdrola at minus 1.52%. Our attention now turns to the Eurogroup that will meet today. EU finance ministers will discuss macroeconomic developments, the state of budgets, and the orientation of fiscal policy for 2023. In US Treasuries, the sellers appear unrepentant, with all series recording losses of around 3% on average. The 10-year yield registered 3.10%, 25 basis points higher, with a 30-year yield climbing to 3.27%. The interest rate curve opened 20 basis points, with a 2-year around 2.90%, confirming the sensitivity of the bond market to the Fed's words. In Europe, the German bond rose to a yield of 1.31% and the spread of the Greek to 230 basis points. In the forex market, the strengthening of the US currency continues, with the corresponding DX index recording a 20-year high of 107.5 points, while the euro's major exchange rate against the US currency is slammed, now approaching 1.01. The pound now stands at 1.1940 and the Swiss franc at 1.03. The yen-dollar exchange rate is also at 24-year high, around 136.70 yen. In commodities, the problem of very expensive natural gas is intensifying, with American Henry Hub at $5.40 per million thermal units, while Dutch TTF shot up to 160 euros per megawatt hour, down significantly from Thursday's 180. Crude oil regained the $100 per barrel, awaiting the upcoming reserve announcements with great interest. On the contrary, gold and silver remain undervalued, with the latter at risk of losing as much as $19 per ounce, visibly weighted down by anticipated liquidations that are not justified by the current market situation, while gold continues to fall to $1,740. In terms of economic releases, nothing earth-shattering is expected today, but on Wednesday the focus is on the results of the US CPI for June, with forecasts calling for a 0.5% drop. A few hours later, the weekly crude oil inventory results are expected, with forecasts showing a 1 million drop in reserves. In terms of corporate announcements, Oracle's dividend ex-date is set for today, with a yield of 1.78%, up 17.4% year over year. We also look forward to PepsiCo's financial results, where forecasts call for earnings per share and revenue up 8% and 6% respectively on a year-over-year basis. Uniswap and Polygon emerged as the winners of the week, with the former even registering over a 24% at the same time as the big Bitcoin is recovering from the massive sell-off of the last few weeks, with plus 7% in the period under review. Recall that the problem of control on the major exchanges remains in the shadow of the problems that emerged from the Terra USD and Luna token front. In the headline ranking, Ether and Tether stand decently behind Bitcoin with $136 and $78 million respectively, while the war for the sixth place between Ripple at 15.29 and Cardano at 15.25 continues. Thank you for joining us today. Stay tuned for our next overview of the global markets.